Hello everyone. Wanted to go over a few things today. Some things really stuck out. We're going to start with GameStop and just charting it. This is TradingView. This is on the the TradingView website. You can get a 30-day free trial. Again, I'm not trying to push this software on anybody because I don't get paid to say this, but I really like it. It is what it is. Fidelity is free. TradingView is not. But if you got the money, I really do think it's worth it. So we're gonna throw up some indicators here and hopefully see why I like it. So I like the volume and profile here better. I use this one, KV for coins. This one seems to be pretty good. You need to modify it a little bit, but I'll show you how to do that. Let's see if we can throw up a MACD, and we'll just leave it at that. Keep it simple for now, anyway. Okay, so volume profile, go to this gear icon. Let's just max all of this stuff out pretty much, except for except for bar width. Leave that normal. And where'd it go? Okay, I set it back too much. What is that? Horizontal offset. Leave that at 50. There we go. Okay. Sorry, this is live, you know? This happens. Okay, so this orange line here is what's called the point of control, or POC. All it is it's the biggest volume in profile candle in the entire histogram. Okay, and what that means is that a lot of buyers and sellers are at this level, right? This one's also very large, but this one's bigger. It's just hidden by the orange. And so typically when your price is above it, this will act as your bottom, strongest level of support. And when you're below it, it can act as resistance. And you can kind of see it here, right? It hit here, it tried to make it over, it couldn't, came back down, did it again, stronger here, and knocked back down, bounced, came back down. Here a little bit again, here a little bit again, bounced here, came below, shorts attacked it here, but they ran out of firepower. Buyer stepped back in, came back up, came down here, knocked it down, bounced up. Right? That's why I like volume and profile so much, to see where the lines in the sand are being drawn, where the longs and the shorts, the bulls and the bears are fighting it out. And what you'll also notice is that these sideways patterns of consolidation, it'll show you that there's, how much activity there is. So here, you see that there's a lot of activity here right when we opened, historically as well. Okay, this is historical. And then a little bit here, but, it'll show you where the volume is. This candle right here, you see that? That wasn't there before today. They tried to establish a new, they called it supply zones or shelves. All right, so this is our biggest shelf, basically. Here it tried to break out, but buyers ran out of firepower, and then it got shorted back down. Okay, so this is a 3-minute chart, which is, something that day traders use. But if you're not day trading, then we should go to a longer time period. But let's just see what the MACD did today. So here the colors are reversed compared to Fidelity. When the red line or the orange line is below the blue line, that's bullish. And then the opposite is true for when they cross over. So it looks like here at the end of the day, we're pushing back up again on the 3-minute chart. But let's look at the hourly and the daily. Mostly we're just interested in the daily. Okay, so it's crossing over. That looks bearish on the hourly. Let's look at the daily. That, I don't know. See, it's like coming down but leveling off, and they're coming really close, but they're not quite touching. It might bounce tomorrow, and that's on the daily chart, right? Technically speaking, actually, I checked this out in Fidelity, but let's see if we can see it here. You can't really see it here. On Fidelity, this blue number here, it reads a little bit differently. When it bounces, that's a shape that can be called a butterfly. On Fidelity, it's showing technically we made a butterfly on the daily MACD today, which is bullish. It means, it suggests that the price will go up tomorrow. On the weekly chart, you got to see this though, right? On the weekly chart, yeah, Fidelity shows it a little bit differently. I don't know if they just calculate it differently or what, or they have a different set of data that they draw from. It's looking like we might be crossing over tomorrow. Unless shorts step in tomorrow with a lot of shorts and puts to drive this stock down, it's looking like we have a bullish crossover on the weekly chart on GameStop tomorrow. And that should be really interesting to see where it goes. Okay, this is something that I wanted to show you that I thought was particularly interesting today. It's a tweet by Soccer Mom Trades on Twitter. She's actually a really talented day trader. I just had never found her account until recently. And she doesn't know who I am, but you should follow her if you are interested in learning how to day trade. She was taking a short position on Tesla after Elon Musk did that poll last week. I don't know if, well, she's public about it, so I'm not like trying to draw all the Tesla fanboys to go hate on her. That's not my intention. The point is that it appears like there's some very unusual activity going on in Tesla. So this was, I think, the Monday when Elon announced that he would be selling his shares. Yeah, this is the Monday, and it barely went down. If you check the dark pool data, wait, was it? Hang on, which day was it? What is this? The 8th. Okay. So on the 8th was the first day of trading where Elon said that he would be selling a bunch of his shares of Tesla, and it barely went down. But then the next day, the Tuesday, it dropped down a lot. And then it went down less hard on the Wednesday. But if you looked at the dark pool data on the 8th to the 9th, a lot of sell orders were being routed through to the dark pools. And I guess on Tuesday, dark pool buyers got exhausted, and so it had no choice but to drop. But here's the interesting thing, right? It's kind of done a miraculous recovery. Look at this. This was yesterday. Elon Musk sold almost 1 million shares of Tesla yesterday, and the price went up. That's kind of weird. What I wanted to show you were the Bollinger Bands. I'm going to add a couple of these. I don't think we can add much more than that. Why did we add a bunch of duplicate ones? Because I want to show you how crazy this price action has been. 3 standard deviations, and let's do 4 standard deviations. And let's go down to like a 15-minute chart maybe. Some of these price moves today were absolutely insane. Look at this. Today and yesterday. Right? Look, on the open, this is 2 standard deviations, 3 standard deviations, 4 standard deviations. This exceeded 4 standard deviations. Now, if you're familiar with the bell curve, I could look it up. Bell curve for standard deviation. Okay, look at this. 99.7% of all results will fall between 3 standard deviations, which only leaves 0.3% outside of that in the 4th standard deviation and beyond. And since we're only looking at an extreme situation, you actually have to cut that in half, so it's actually 0.15%. I mean, this is some abnormal shit right here. Somebody really desperately wants Tesla up. And, you know, since 13F just came out, maybe we can check Whale Wisdom. This is all live. I haven't looked at this before. So let's go to Whale Wisdom. Let's look up Tesla. Whale Wisdom, you know, it aggregates 13F data, which is the quarterly filings, to see what everybody holds. And it's free to sign up. It also has a paid portion of it. You know, some of it's locked behind a paywall, but the basic stuff you can see for free. So Elon owns the most. Vanguard owns a lot. Value Star Asset Management in Hong Kong owns a lot of calls. Market value. Okay, so, and here's the, I'll make another video about this, but you can't always trust 13F reports in general, but also, especially if there are options contracts reported on 13Fs, you can't really trust that either. So here's a familiar name, Susquehanna, and they have the they're the biggest put holder of Tesla. And they have calls too, but they have more puts than calls. So I would call this net short. Susquehanna is also interesting because they are, or were, the biggest put holders of GameStop while also being the biggest call holders of AMC. This goes back to my theory that AMC's a counterweight to GameStop. They trade the same because they're on opposite sides of the balance sheet, or, you know, the account. Somebody, this is my theory, somebody's very short GameStop, and to counterbalance how much money they're losing on GameStop, they have to have something pump up, and maybe that's AMC. Just a theory. I don't know because I haven't looked at anybody's books. Citadel also puts now. They have calls, but they have more puts than calls. Interesting. So the point is, somebody needs Tesla up, is what it seems like. Hong Kong. Interesting. Anyway, that is Tesla. Just wanted to look, it goes into the 4th standard deviation multiple times. Yesterday's open was crazy. Look at these. 4th standard, this is like 5th standard deviation stuff. This is statistically highly improbable. I mean, I wish Pone was here to offer a little bit more insight, but she's in Twitter jail right now and not responding to messages. LoopRing coin. These are some lines I drew way back when, but, you know, just wanted to point out the volume and profile here. Pretty thin. It's not looking too good on LoopRing coin. The crash yesterday, last night, when all the other cryptocurrencies crashed, the fact that LoopRing coin also crashed with it doesn't give me a lot of hope for this. Now, any catalyst could send this thing flying. We could easily, you know, see new all-time highs. And we do think that a catalyst is coming soon, but we don't know when exactly, or exactly what catalyst. But, you know, again, when this is what you don't want to see, is that when all the other cryptocurrencies are crashing, LoopRing coin also crashes. That means something weird is going on, you know? Somebody else is controlling this stuff. We think retail probably controls a fair bit of LoopRing coin, but I don't think so. I don't think so. I hope I'm wrong. But yeah, you know, these lines, they may not make sense, but you're really just looking for bottoms to see how many points connect. And if you look at this diagonal here, bottom touches here, almost here, but here, and then it drops below and it comes back up, and then now it becomes a overhead resistance, so it bounces here, 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 and here again, almost broke out, came back down. So this is drawing lines is something that you're going to have to get used to, and one of the reasons why I like TradingView so much better is that drawing lines on TradingView is so much easier and clearer than on Fidelity. Like, this is very legible, you know what I mean? You can see everything on the screen very, very clearly, and I like that. Fidelity doesn't make it that easy, so that's what I liked about TradingView. All right. Oh yeah, also volume has died. Look at how little volume we're getting. There's nothing. There's some tweets that I wanted to point out. I made the global dollar shortage video yesterday. I published it this morning. It's really long. It's complicated. And so if you don't feel like watching an hour and 10 minutes, 11 minutes of me ranting, I don't blame you. The long story short of it is that the entire world needs dollars. It's very hard to get dollars. And so when they need dollars to pay back debt or to buy things that they need, then they have to sell assets to get those dollars, right? They have to trade in their own currency on the foreign exchange market to obtain US dollars to be able to conduct in whatever trade they need. And you see places like Turkey, they're unable to get US dollars to the point where they're printing so much local currency that they have hyperinflated their currency. And it's not just Turkey, it's a bunch of other places. But Turkey right now, I think, is one of the most badly affected ones. Same thing, same principle, same idea applies to precious metals. Right, so people think that we're going to enter into a gold, silver, precious metal commodity bull market, and I don't see that happening yet. I think it's coming soon, maybe, but again, if you need US dollars, then you have to sell off your gold and silver to get it, right? Because even though we see these metals as being precious and valuable, they've actually been declining for about a year. And I think the current rally that we're seeing is a bit of a sucker's rally, because look at this. All of London's base metals, these are future contracts, right? They're all in backwardation. And here, this Twitter user explains it pretty nicely. It's the market condition where the price of a commodity, in this case metals, gold, silver, copper, whatever, their forward or futures contract is actually trading below the expected spot price at contract maturity. So I think what that means is that there's incentive to try to make as much money now on the stuff, because you know that in the future it may be worth less. And this makes sense because if the dollar is getting stronger, the buying power increases. So in the future you'll be able to obtain more gold by spending less money, right? So in face value of dollars, you're going to be making less money in the future. So the time, if you're a seller, the time to sell is now. That's what that suggests. Speaking of LoopRing coin, Cyberduck pointed out that he tried buying more LoopRing coin on Coinbase. Trading was disabled, and Coinbase Pro, like these things were disabled. He couldn't buy LoopRing coin, but it's mixed because this guy clearly just bought 1,000. And when we started discussing this, a bunch of Twitter bots came out of nowhere. They were all shadow banned, and they said no, to message them to click on this link or whatever. Be careful with links online. You could be getting phished. Last thing. This is a tweet thread that I think everybody should read. This is by this guy. And this has a lot to do with options. I know a lot of people are trading options these days. I think last month more options were traded than shares traded by retail investors. And that's a bit of a concerning situation. The other concerning situation is that I think a lot of newbies are starting to sell puts and sell calls against their long positions. And that can be dangerous because we've seen how volatile these markets could be. And so there's a very good chance that you think you're making a little bit of money by selling puts and calls against your long positions. But then what if you get assigned? If you get assigned, what it means is that you actually have to hand over those shares. So now you're just being robbed for pennies on the dollar, essentially, right? If you're selling puts, covered puts, and then you get assigned and somebody takes your shares, not only did you you lose your shares and you made a little bit of money by selling the puts. Like, that's going to feel awful. And same thing with the calls. If you're selling calls against your long positions, and the volatility, like you see here with Tesla, right? 4 standard deviations. This is an insane amount of upwards momentum, okay? Let's say that happens to whatever you're holding, and you get assigned. So you made a little bit of money by selling the calls, but then you lose all your shares because you got assigned, right? So this is a thread that everybody needs to read, in my opinion. Carefully consider what you're doing when messing around with options. They're complicated derivative instruments. I'm not trying to be insulting. I know I can come off that way sometimes, but like, really, please do your own research. Okay, that's it for today. I will talk to you later.